All right, let's get started. Hope everybody's doing very well. And we are live. This is Travis Witherspoon from Carter Cow Trading Travis on YouTube. Hope everybody's doing very well on this Wednesday morning. It's the day after the election, but we don't necessarily know who won. And we're gonna go through and take a look at it and see what's actually going on. So we'll go from there. So I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education. And from that education, you can be able to make your own informed decision. I understand that Forex involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So showing myself onto the screen. Hopefully everybody can be able to see me. I hope everybody's doing very well. I can see that I'm on YouTube right now. Obviously, I see that we're starting to slowly get on the Facebook and be able to go from there. My son is actually running into the room and trying to get. Come here. Absolutely not. Go eat your breakfast. He's trying to run in here and get M&Ms, and he's in his underwear. So let me see if I can block him real quick so I can be able to get him started. Be able to get out the way. Give me 1 second so I can be able to get him out the way, and then after that, we'll be able to move on forward from there. But hope everybody's doing very well as we get this done. Okay, give me 1 second. Yeah, get out of here. Come on now. Okay, sorry about that. I hope everybody's doing very well. I had to sit up there and figure out what my sons were doing, and they sit up there and messed up the kitchen a little bit. So here we go. So what's going on? Let's see that. Obviously, we're looking at it. The electoral votes right now is that Biden has 224, Trump has 213. Obviously, you got to get the 270. There's a lot of different areas that are not necessarily fully done. The Senate control right now is 46-47 in favor of the Republicans. And obviously, we're looking at Nevada. We're looking at Colorado. We're looking at a few different areas like that. Obviously, Michigan and Wisconsin. It said that Maine was done, I thought, but Maine doesn't look like it's done. It's showing that North Carolina is not done, and it's showing that I believe that it's Georgia as well that it's not done when it comes down to the overall shot. So I have to be able to pay attention to that, see how that's going to end up going. Remember, we end up talking about that we didn't necessarily want to trade while the information was kind of going out, because we thought that the market was going to end up moving, and that's exactly what ended up happening. I want to show you exactly how the market ended up moving with the NASDAQ 100 to kind of give you an example on what ended up happening for this overall movement. But like always, what we're going to end up doing is that we're going to go through and go through our overall process, like always, go through our mechanics, and then after that, be able to make a decision on what's happening. So today, what we end up looking at, we end up having the Euro market services PMIs. They actually end up coming out for, that would be Spain, Italy, and the Eurozone. What we end up seeing was the numbers actually was less than 50. but it was above the overall average, which was expected to be 40 and 54.5 and 49.5 respectively. So they did go past and meet expectations. And we end up going from there. A little bit later on today, we're going to end up seeing trade balance. We're going to end up seeing IMS services PMIs, and then after that, we'll see trade balance from the Australian dollar. Now, overall, when we're just looking at this pair and just thinking about it in general, all of this other news really doesn't matter until we end up getting a declared winner when it comes down to the presidency. So we have to know that when we're trading, we have to keep that and know that we probably will see still a lot of movement overall when it comes down to being able to get an eye in trading this in general because of that movement as a whole and not understanding what's happening with the overall market. If we look at what ended up happening a little bit earlier today, when we look at what ended up happening on the daily, we end up talking about how a couple of days ago, if we wanted to be able to sell this market when it was in consolidation, we necessarily could. This market is still in consolidation and it's starting to move down to support at 12,000. Now, once we end up getting a reported winner, we got to figure out what's going to end up happening with that overall movement. Is the market going to continue being bearish? Is it going to end up breaking out of this area and retesting and then pushing down below the 12,000s? Is it going to end up pushing up past resistance because of whatever may be the news? We just don't know. And because we don't know, and because the market's in a no trade zone, that makes it another day of just being able to wait on the sideline and being able to see what's going to end up being the best possible trade to be able to take overall. So US dollar index, I'm still out on its overall pair. Doesn't matter about the setups, doesn't matter about anything else like that. I want to figure out what is the direction of the market, because once that news is being put out, we'll end up seeing what the overall movement is going to end up being in general. Let's take a look at oil. Oil on the daily is still in the buy zone. We expect that the market is going to end up eventually going up. This market has went through a ascending triangle, from there dropped, and then after that went into box consolidation. Once it ended up going into box consolidation, typically, remember, the market is basically, if the market is going to end up being trending, it will turn past support and the future resistance. That did not happen. The market ended up breaking up and out of that overall area. So we go back to consolidation rules. Once again, consolidation rules just means that we're buying at support, we're selling at resistance, and we're looking at being able to catch a high price at this particular point where the market could get up to right around $41 a barrel. And then after that, look to be able to sell again somewhere around this area. Kind of like what we ended up doing before, but we got to make sure that our stop loss is high enough to be able to ensure that we end up staying in that trade. So that's the biggest thing when it comes down to this overall market right now. We do expect that the market is going to end up being continued to be bullish. If you have not been trading oil since then, I don't think this is necessarily the greatest time to be able to get in unless you end up getting a counter trend line break and you're looking to be able to scalp the market. Remember, consolidated markets, the only thing that you're looking to do is be able to scalp. We talk about this from a 2-hour perspective. The 2 hour is actually in the sweet spot area. We're seeing that this market has been rising up in this manner, has been having a very good push to the upside. If you're looking at being able to trade this to the downside, then I'll look at being able to see a counter trend line break right here. Now, remember, we talked about the $39 to $40 mark as being a pivot of an area where the market could look to be able to fall down to at this particular position. Right now, that remains to be the same. If this market breaks past the 39.80 area, then it'll break past the A of the 2 hour, which means that the market could continue to push up to $41 a barrel, because this market is, in my mind, considered to be in consolidation. Even though we're looking at the even though we're looking at the overall Fibonacci's and being able to set and being able to show that we have went through 3 different swings, I still think that overall that this market will probably end up breaking an A and then looking to get up to $41 a barrel if this market is truly going back into consolidation. So what are we looking at with oil? Oil, we're looking at potentially looking to be able to sell. If you haven't got in for the buy opportunity, if you are in a buy opportunity, remember, we're going against the overall trend. So I'll only look at being able to buy up to the $39 a barrel mark and being able to get out halfway. So if you are in, stay in, look to be able to get out at $39.70, $39.80. If you are not in, don't look to be able to get in, because there's really no risk, there's really no reward on being able to get into this trade at this particular point. Just wait till you can get at $41 a barrel and be able to go from there. Take a look at gold. Gold, we've been paying attention to this one. We've been saying that, okay, well, this market is getting very close to be in a very suitable position to start looking at buying long term. Now, what I mean by buying long term, when we look at the weekly, we see that the weekly is basically in the buy zone and start to break out of this trend line. If this market holds by Friday and stays above this overall trend line, then we have a true opportunity of being able to get in early and allow the market to be able to ride all the way up to first off the 1985 area up to the 2300 area long term. So with that being said, that is something that I'm very much interested in and being able to see how this market is going to end up reacting for us being able to trade to the upside. We go to the daily. We can see in the daily the market was in a buy zone. We've seen that we end up based off of the violent movement that ended up happening yesterday. We end up breaking out. We end up retesting, and the market ended up going all the way down to the market went all the way down to 1881. That 1881 mark was a very sharp move that happened doing I think right around the 8 o'clock p.m. time when some overall areas started to get some early voting and kind of get some ideas about what was happening with the market. And currently right now what we're seeing is that this market stays above this overall trend line. We should see more of a bullish push going up to 1965. Now, does that play with what we end up seeing with the U.S. dollar? Yes, it does, because the U.S. dollar index is in consolidation and starting to move towards the support area, meaning that we should see that we probably might end up having a little bit more push to the upside if you end up wanting to stay in this trade. You're looking at this from a 2-hour perspective. We can see that the market is in the buy zone. We see a counter trend line break that's actually happening right now. Quite frankly, this is a active area where I will look at being able to buy. And I know that we end up talking about being able to see what's happening with the U.S. projections and everything else like that, and that remains to be true. But right now, I think this is probably the most prime area on being able to buy up to short term, going up to 1935 for that overall spot, which is about in this case about 27 points away. 27 points away from this overall position. So I'll be looking at being able to get in on buys at this particular point for this overall market. Let's take a look at matter of fact, let's do a quick trade setup. Let's see what we can be able to place a stop loss at. Let's see what we can be able to go from there. Going back to the daily, because this market is rapidly starting to push. Going to the daily, if I'm placing my stop long term, my stop would be below 1845. That is a very good spot to be able to be under. If you want to be a little bit tighter, you can go under this wick low that just happened right here, or go to the 2-hour and see what's happening from this overall C position and be able to place your stop right there. So our stop will end up being below that overall point right there. Let's go to the 2-hour and kind of get an idea about what's happening. From the 2-hour, went down with the smart field, talked about right there. I will place my stop loss below 1873. So I'm talking about, so probably 1870. I would look at this as an active trade right now. The 2-hour is basically in the buy zone. We do have positions to be able to get in. I do like the overall position long term. Market will end up going up to 1933. Risk right now, if we're looking at overall risk, it will end up being 355 points to 243 points on the 2-hour. If you're going out to the daily move, we said 355 points going forward. In this case, it'll end up being long term about 607 points. So that does work out. I would say go ahead and take that trade if you're looking at being able to get in. If you're looking at trading this long term, obviously it has ways to go to be able to go to the weekly. But I would actively look to be able to buy on this overall trade and be able to go from there and be able to get in at this particular position. Henry, thanks for the like. Yeah, I would almost look at being able to say that that's an active position to be able to get into. So once again, I'm going to write this up real quick so everybody can be able to take a look at it. Stop loss will end up being below 1871 or be at 1871. See, stop loss, you can go 1871.50 if you really want to. Stop 1871.50. Take profit will end up being, I'm going to go to the daily D extension, not the 2-hour. The daily D extension is expected to be, the daily D extension is expected to be at 1933. So basically have a 1-to-1 when it comes down to this. I think that stop loss won't be touched though. If I'm being this brutally honest, that's 271 points for this overall move. The risk to reward is a little bit off between both of these pairs. So you wanna be a little bit more for certain. I'll place it just below I probably place it just below this long wick that just happened. But if you don't want it to be touched, place it below the 2-hour low at 1871. Go after 1935 for the first move, and then after that, long term, we could be able to look at being able to go up to 2300 for the overall position long term. I do think that both of those end up being active good trades to be able to get into long term. So there we go. We have gold as our first position of the week for us being able to get into. Let's take a look at the currency strength chart to see what's going on. Currently, right now, once again, the market is basically in a position to where there's no clear winner, there's no clear loser. Once again, it's kind of at a point to where, once we end up getting news about what's going to end up happening, you got to see, you'll see how the market basically ends up reacting to it. Because if people are afraid of what's happening with the U.S., then things like gold will end up being strong. Things like the Japanese yen will end up being strong. Things like the Australian dollar, some risk-off performances will end up being strong. And you just have to keep that in mind when it comes down to this pair. Let's go over to NASDAQ 100. I want to take a look at this one and be able to show you the volatility in the market overall and what ended up happening. So just give me 1 second. Come on, big boy. We talk about what has 3 days been to the overall market. So we looked at this overall position. We ended up talking about on the 2-hour, and I'm just going to focus in on the 2-hour in general because this move has been a crazy ride to the upside. We said that on the 2-hour, we're looking to be able to sell all the way down to basically 1100. The market ended up hitting 1100, and then after that, double tapped it again and then pushed right back up. From the news alone, once it ended up breaking this trend line that we ended up talking about yesterday, this purple trend line to the upside, the market ended up going from 11,250 all the way up to 1,700 in a span of almost 4 hours based off of this overall move. So if you rolled up this overall pair, that's 542 points. For some people that know what the NAS 100 can be able to do from an overall trading perspective, that could easily be right around 5 to 10 grand versus overall movement, depending on your account size. So that's something to be able to pay attention to for the overall movement. That does spell that overall long term, we should see upside movement long term for this overall space. From there, the market actually fell back down and hit the point of control and then bounced right back off. So I do expect that the market is going to end up continuing to be bullish long term. Going back to the overall daily, the question is, okay, well, where would the market go based off of that movement? Now we look at this overall upswing. What we can be able to do is place this field up and be able to see how this market is going to end up reacting. Remember, long term, it had this bearish crown. The bearish crown is still expected to fall down to 10,236. But if we end up continuing to see good news from the dollar in general, good news from the NASDAQ in general, then stocks and everything else like that will probably end up having a strong move to the upside. So let's take a look and see where we're at on this one. There goes our high, there goes our low. Market has retraced all the way down to the 786. The market is expected to go up to 12,868. The market goes up to 12,868, then that market will be well on its way up to another 600 pip move overall. The daily is in the buy zone. The market, the daily is crossing from the buy zone. We see that the 2-hour is not necessarily in the greatest position to be able to get into right now. If I'm looking at being able to get in on this position, I will try to wait and see. If you did not get in at the point of control, I'll wait to see what kind of trend line break you can be able to get based off of the 2-hour or the 1-hour, and then after that, look to be able to get in off a 5-minute trade to the overall upside. But I do like what I end up seeing. I would rather wait for the market to be able to get down here in the buy zone to be able to go. If that does happen, then obviously you want to look to be able to ride that trade up to the top and be able to go from there. Question is, are you going to get that trade? We don't know. We just have to pay attention to it and kind of see how that kind of plays out. Very briefly, because remember we said that we weren't necessarily looking at U.S. based pairs on being able to trade, at least not yet. I do want to talk about what's happening with the U.S. yen. U.S. yen, we've been talking about this for a while. We said that if the market broke past 104, 104, then the market was going to fall down to 101. Currently, right now, if we look at the market and seeing how it's actually falling, this is a actual move right here to the downside that you could be able to take advantage of. If I'm placing my stop anywhere, my stop will end up being above basically 106. And then after that, look to go down to 101 for its overall position. Remember, U.S. is showing weakness. Other pairs basically pounce on that. We're talking about 166 pips for its overall movement, going down to the 101 area as the first initial area, and then down to 99.20. Risk reward from this overall spot is going to end up being off. I think that the 2 hours basically getting close to the buy zone. We had some strong movement over the course of the last few hours. It's been 34 pips from right there. It's been 44 pips from right there. The market has been moving in general by itself about 118 points. Now, once again, that kind of spells on why the NASDAQ 100 ended up making a move as well like that. So you can do two different things right here. One, you can stay out of it and hope to be able to see if you can get a retracement and see that the market kind of pushes back up and maybe give you a high price in some of this consolidation area. I would say somewhere around here. You can be able to get in right around that consolidation area, right around that area, then maybe that might be a position to be able to get into. Once again, because we don't have an answer on who ended up winning, this market could just run down without you, or you can get in and then after that it can be able to push away from you. So me personally, what I'm going to end up doing is, I know that I want to be able to trade down to 101. It would be perfect if I could be able to do that, but it's not the time for me to be able to chase after this market and be able to go after that. I know me personally, I will not chase after this market. I will try to see if it'll be able to give me another position. Obviously, we had the position to be able to get into yesterday for the overall movement when the market was going through and kind of figuring out what's happening. So that's it with that. Last pair that we're going to end up taking a look at. Let's take a look at what's happening with the let's take a look at and see what's happening with the Euro United States dollar. Remember, we were looking at being able to take a buy on this pair. Quite frankly, if you took a buy yesterday basically as support, then you were very good on this overall pair. For the people that did not take a trade as support, we said that we wanted the 2 hour to be in the buy zone and be able to take a trade from there. We have exactly that right now. Once again, this is kind of you would have got in a little bit earlier, right around 2 o'clock or anything else like that. You'll be up 100 and you'll be up 108 pips at this particular point in time. So you have to keep that in mind when it comes down to your overall trading in general about where the market is going to end up going. This market could fall, but the market is definitely in the buy zone when it comes down to this move. Out of all of the pairs that I just looked at between between the U.S. Japanese yen and the Euro United States dollar, I actually like this one a little bit more to the upside and being able to trade in that overall direction. So let's go back to the daily. Let's see where the stop loss will end up being. We're doing stop loss in this one. I'll place a stop loss just below the overall consolidated area. Take profit area that I will end up going after will end up being the ABCD sequence, or basically up at 1.18. Take profit 1 for this overall position will end up being right here. Take profit 2 will end up being at 123.65. So we're talking about for a overall risk. Right around 137 pips, going after 180. Going after 176. If you're looking at trading at forced consolidation, if you're looking at trading at long term to 123, you're talking about another 600 pips for that overall move. So you're talking about a 1-to-5 risk to reward ratio if the U.S. dollar remains to be weak throughout this overall day. So for me, I'm going to take this trade. I'm going to be a little bit more conservative, but I'm going to end up taking this trade. I treat it as if it is in consolidation. I will go with only 2% on this overall trade, and then we'll go from there. So this is what we're looking at. Let's see. Let's take a look at the Euro United States dollar. We said that our risk was basically 130. We have a R4, so I'm going to go with 2% for this overall trade. Try to lower the risk just a little bit. We're going to go with 1.25 lots on this one. If we go all the way up to the 600 pip reward area, we're talking about $747 as compared to the 600 compared to the actual $162 that's worth on the rest. So I'm actually going to end up taking this trade. This is something that I'm interested in being able to get into. We'll go ahead and play that, and then see how everything goes. See how everything goes from there for the overall trade, and then obviously we'll let everything else kind of take care of itself. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you end up subscribing with Trade with Travis on what we end up doing on YouTube, and hopefully this trade that we're about to take on the Euro United States dollar, you end up capitalizing on that trade as well with us, and being able to go from there. My son just hit my phone and hit my car keys, so I'm gonna turn that on. Just took the buy on that trade. Like always, plan your trade, trade your plan. Everyone, y'all have a good one. Once again, be very careful with the way that you're trading. Be careful with the way that you're trading. Obviously, we don't have an answer yet. All right, take it easy.